This month, we take a look at why share markets have been on a rollercoaster ride, Australian companies' half-year earnings, and if there's a trade war, how will it affect you? Global share markets got the jitters in February as investors started to factor in the potential for interest rates in the US to rise more quickly. The S&P 500, an index of US stocks, fell around 8% in a week, which was quite dramatic given the relative stability in markets of the last year or so. By the end of the month, the index had recovered a bit over half of its losses, but it was still the worst month for global shares in 2 years. So why was there such a big reaction? Well, markets had been calm for so long that to some degree complacency had taken hold. A small loss turned into a bigger loss, and investors who weren't really expecting volatility sold more shares, which only made things worse. The fundamental backdrop for shares this year still looks pretty good though, but we do expect that we'll see more of that volatility than we saw last year. February is reporting season for a lot of Australian companies, releasing their results for the first half of the financial year. Overall, it's been a bit better than average, with around 80% of companies meeting or beating expectations. Only 4% of firms reported a loss, which is the lowest level since 2007. Despite this solid reporting period, many companies have faced escalating costs. So while reported revenues have been higher, we've seen a small decline in overall net margins. A key watch point for the outlook is how wage growth and the housing market develop. Growth expectations are relatively modest, so we're not overly concerned. But as with global shares, it's probably not going to be smooth sailing. In early March, President Trump announced large new tariffs would be imposed on US imports of steel and aluminium. At this early stage, it's difficult to foresee the ramifications of this controversial step towards protectionism. The initial reactions from trading partners like China and the European Union were measured, but it's too early to rule out retaliatory action. A trade war, if that is where this ends up, would have a negative impact on growth and jobs, and it would lead to higher inflation. The effects would be felt in the US as well as across the globe, and particularly here in Australia. It wouldn't be in anyone's interest for this to happen, so hopefully sensible heads will prevail.